credit mechanism system of the bank. Today also I will discuss about some concepts with regard to the credit management of the banks. Again, I am reiterating why these are required, because you are handling the most of the cases are banking cases. That is a financial institutions case. Whether the loan is processed or sanctioned by the bank or the financial institution, any financial institution, the process is one and the same. Because the banking system is a unique one. Whether the loan is processed by State Bank of India or Union Bank of India or other banks, whatever the public sector or private sector or even NBFCs also, more or less, the appraisal is required, the pre-sanction is required, the sanction process is there, and the post-sanction process is also there. Once I completed all these classes, then I will send the PPTs in one lot to the institute to share the paper. But here, what I going to say is, some of the information is available in the banking with regard to the corporate data. So we need not search, we need not scout, or we need not verify the records. Instantly it is available, because once the banks are giving loan to the corporate debtors, they will gather or collect the valuable data that is required for the credit management process. Valuable means all types of information of the corporate data that is required. Otherwise, to give 1 rupee of the bank to the others, lot of safety, safeguard, they will ensure all these things. Once they are ensured all these things, then the quality of the appraisal will increase. Still, even though banks are taking more precautionary measures, some of the loans are turned into bad. Some of the loans are filed with the NCLT and DRT, or initiation of SURFACE, or written off, or compromise, or one-time settlement. All these things, it is a continuous process in the banking system, because we are forecasting the future of the company. Yes, today I am giving 100 crores. Definitely, through the surplus generated in the business operations, definitely he will go pay the amount that we are presuming at the time of giving the loan. But sometimes, due to internal or external reasons, the loan turn into bad. If you take the bad loans and 50% of the loans are mismanagement, remaining 50% due to market conditions, etc. So the mismanagement is to be arrested. Why they have introduced preferential, undervalue, fraudulent and extortionate transaction? Because based on the experience and all these things. So that's why understanding of the bank credit management or credit mechanisms is very much required. Yesterday also, I interacted with one of the retired executive director. Sir, for processing of a PPIRP, whether IP requires credit management knowledge or not, he said definitely 100% he will require. Otherwise, whenever he is interacting with the financial creditors, without knowing the basics of credit management, how he will interact? He has to interact. So, sir, so and so, you have given this much loan and for this purpose, and they have given the primary security or collateral security, they have given the personal guarantee, all these things and ratios, because at the time of this one, the demand and supply of the product is like this. Today, the demand of the product is not up to the mark. So, now the company is facing some liquidity problem, all these things. Not only that one, you have to prepare the base resolution plan. If at all you are not aware of the financial creditors, how they are lending, all these things, don't know, how you will prepare the base resolution plan? Tell me. So for this, bank credit mechanisms is very much required for optimization of the either CIRP or PPIRP. That's why the initiate also requested me, and I am giving the lecture particularly on these aspects. Yesterday, I discussed about a type of products, particularly the working capital loans, the term loans, the bank guarantees, and the letters of credit, etc. Only basics. I am not going into the details also, because once I am going into the details, lot of time is required, but coverage may not be possible. And trades, TREDs, trade receivables discount also, I will discuss in another class. Once the particular to be covered is less, then I will accommodate that one and I will discuss that one also. That is also one opportunity for you to get or to mobilize the cases, to acquire the cases. That also I will discuss later on. Now coming to this one, the today's discussion is on any bank, any credit proposal, whether it is a small proposal or big corporate proposal, the three steps are there. Loan process contains three steps. The pre-sanction, sanction of the loan, after sanction of the loan, that is called post-sanction of the loan. Pre-sanction, sanction, and post-sanction. These are the three steps. Whether it is a small loan or a big loan, like a corporate loan or any small loan, these three steps are there. That is a pre-sanction, sanction, and post-sanction. In pre-sanction, what type of activities the bank is completing for the credit proposal? During sanction process, what type of areas they will cross-check or look into while sanctioning the proposal? Once the loan is sanctioned, what type of activities they will do? All these things I will discuss. And this also, whenever any relevant area related to CIRP and PPIRP, definitely I will bring to your notice. Credit management process is pre-sanction, sanction, and the post-sanction process. Only these three steps. The credit management, even any loan. If you see the three stages of the credit management, in pre-sanction normally, they will take the application, KYC compliances, proof of income or revenue in case of the companies, appraisal, etc. Now, today, the government of India also instructed loans are not to be sanctioned based on the balance sheet. Loans are to be sanctioned on digital footprints of the borrower. Digital footprints of the borrower. So that's why earlier the banks are usually take a balance sheet, ratios. Next, lot of the numerical work is there. Today, no. digital footprints. This was announced by the Government of India in presentation of finance budget by Madam Nirmala Sitharaman, 24-25 budget. 24-25 budget, she clearly told for all MSME borrowing and the lending, take the digital footprints of the borrower instead of balance sheet. Now, normal generally trend, most of the balance sheets, the accuracy is not up to the mark. Even though it may be the audit. General notion is, some of the borrowers they are telling, they are preparing 3 balance sheets. One is for bank lending, second one is for ROC, third one is for declaration of results. So for tax purpose, not declaration, tax purpose. If they are doing like that, if at all we have taken that type of a window dressing balance sheet, then it is a garbage in, garbage out. Garbage in, garbage out. So that's why the pre-sanction, sanction and post-sanction. Now in the pre-sanction, the digital footprints are there. And the sanction, scrutiny of the proposal, scrutiny of the proposal. The scrutiny of the proposal is the very, very important, particularly in the, only 1 minute, sir, only 1 minute. So sanction, once the pre-sanction is over, the total documents, the relevant data, all these things to be submitted to the sanctioning authority. In the bank, sanctioning authority, different layers are there, depending upon the quantum of loan. If the quantum of loan is less at the branch level, if the quantum of the loan is higher, it goes to zonal office or regional office, and further the credit committees, etc., etc. So they will also verify all the total file, and if at all any deficiencies are there, they will raise the deficiencies, and sometimes they will reject the proposal, or if at all are okay, they will process the proposal. First sanction. Once the loan is sanctioned, then the borrower to be invited, and whatever the documentation, all these things they will complete. But these 3 to be known by the people. Why? Because if you know these things during CIRP or PPIRP, if at all you require any type of the particularly any type of documents are required during CIRP, PPIRP, you can directly contact with the financial creditors. Thereby, your job or your process will not be delayed, and the comfort level will increase. And in the sanction also, scrutiny of the proposal, sanction, delegation of powers, terms and conditions, they will fix. And in post-sanction, they will send the total proposal in a synopsis manner to the higher authority for information and control. And they will take the documentation, disbursement, ensure end use of funds, monitor as per bank guidelines, soft and hard recovery. All these things are the third stage. Stage 1 is a pre-sanction. Stage 2 is a sanction. Stage 3 is a post-sanction. Now coming to in detail, I will discuss about all these things. The pre-sanction process. As I told earlier, the credit management process consists of 3 stages Stage 1 is a pre-sanction. Stage 2 is sanction. Stage 3 is a post-sanction. These three stages are the proposal or the credit proposal will be processed and monitored. All these things are covered. If you know about all these things, then directly or indirectly, it helps you in CIRP or PPIRP process. First, whenever the corporate debtor submitted a loan and they requires any loan, he has to submit the application, particularly on the bank's standard format. So this standard format, full particulars of the entity. So whatever the information required, if you take the loan application Xerox copy from the financial creditor while preparing this information memorandum, it is very, very useful. First of all, to my knowledge is concerned, the loan application to be taken as a Xerox copy. Then you will get a fair idea about the company, because once we are asking the full information about the company, then only we will start the process. Otherwise, you don't want to start the process. And it will be filled by all columns by the corporate data. Whatever it is there, information, registration, whatever directors, what is their experience, all these things in the application itself, it is there. Sometimes we will ask the photographs of the directors also. So this application permanent document of the bank. Once the loan is failed, normally we used to file this application also earlier, various judiciary authorities to recover the loan. Second one, KYC AML guidelines. For every loan, once the application is filled up by the borrower, we have to obtain the KYC guidelines. Particularly in case of companies or limited liabilities partnership LLPs, we ask the memorandum of association, articles of association, board resolution for this loan. Once the board resolution is not there, we don't want to sanction the loan, because that is in articles of association in every company, the resolution is a must. Once the board is not having the powers to borrow the loan, then we should not give any loan to the company. So the articles of association is one important document that is called indoor management. So what are the powers of the directors or board? All are available in the articles of association. Memorandum of association, everybody knows about that one. The name clause, the registration, register officer clause, or whatever the liability clause, all are available. But whenever banks are giving any loan, these are two important documents, that a certificate of registration or a certificate of commencement of business. If at all it is a public limited company and going for public issue, once the public issue completed, then certificate of commencement of business, that also issued by the ROC. So here, the board resolution, the certificate of registration of the company, or whatever the PAN or TAN, whatever it is there, or GST number, we have to take. And the address proof as per the ROC registration. And in case of individuals, directors are there, we will take the PAN card of the directors, their Aadhaar card, all address proof, all these things we will take into. for the processing. Why? Because why we are taking directors? For most of the loans, the director's personal guarantee is also required. Once the company is not paid the amount, we will go against the deficit amount. We will go against the personal guarantor, director's personal guarantee. Next, all these things, normally we will enter into the loan document register and we will stamp and a receipt also given to the company. When the application received, how much time it will take all these things. Later on, first we will complete first we know the purpose of the loan. What is the purpose of the loan? Whether it is for working capital or a term loan or non-fund based business like a letter of credit or bank guarantee or any bill discount. And all these things we should know. We should know. So the purpose of loan, then only we may, some other companies, they will submit along with the application the total project report and a TEV report also. Project report as well as a TEV report also. We will go through that one. After that, and based on the economic viability or various feasibility studies, if the company is eligible for loan, then we will take opinion report on the guarantors. Directors, or in case of corporate guarantee, other company is giving guarantee, we will take the corporate guarantee opinion report along with the assets and the liabilities statements. Suppose a director is there, the director assets and liabilities we will take. If at all assets and the liabilities are not up to the mark, there is no use to take as a guarantor. So that's why here, whatever this opinion report, we will take the opinion report of the guarantors. And in the guarantor's opinion also, we will ask, what are your assets, what are your liabilities? Simply statement of the assets and the liabilities is not sufficient. And we have to ask, if it is assets are you mentioned in your assets, liability statement assets, the Xerox copies of the assets. If at all you mentioned land, 5 acres, land title deeds are also to be mentioned. If at all he told that LIC policy 20 lakhs are there, 20 lakhs latest receipt. If at all he mentioned NS is worth of 40 lakhs, Xerox copies of the NS. All these things to be attached to the assets and liabilities, not originals, only Xerox. Then we will verify. Some of the borrowers, they will mention, the directors, they will mention the gold, the cash, all these things. Bank normally they don't take the gold as it is immobile. At any time he can sell out. So that's why we don't take that one. And after verifying that assets and the liabilities, we will arrive the tangible net worth of the borrower, the director. Tangible net worth of the director. And accordingly, so that's why in case of a personal guarantor to corporate debtor, if the corporate debtor, the personal guarantor to corporate debtor, most of the directors, they told, I don't have any assets. Don't believe that. First of all, you have to take the opinion report that is available at the bank. At the time of sanctioning the loan, what type of assets he has mentioned, and then you take that one, then definitely once it is alienated or transferred to other people, then we will take later on whatever the legal action to be initiated, all these things later on. But Once at the time of giving the loan, I'm having this much building, this much land, this much farmhouse, this, because at that time he is always showing the real picture. Once the loan is turned bad, he will show the black and white picture to the bank. So the opinion report, that is not only on guarantor directors, but also corporate guarantee. One company is giving guarantee to the other company. For that also, we have to take the opinion report. Some other banks, instead of verifying all these things, they will take the net worth statement from the chartered accountants, certified by the chartered accountant. The chartered accountant also, he will verify the net worth of the particular director and arrive a conclusion, and he will certify that this person is having the worth of this one, tangible net worth of this one, like that they will sign and give it to the bank. Either in that also he will mention the assets of the borrower and the liabilities of the borrower also. So that also is useful in case the company is a personal guarantor to corporate data, that is required. So why, whenever we are knowing all these things, then to some extent it is helps a lot in discharging your duties as an IP, definitely through that particularly during CIRP process or PPIRP process or personal guarantor to corporate data, etc., etc. Now coming to verification of CIBIL report. Whenever we are giving to the company loan, normally the banks will verify. All these things are pre-sanction only. Before sanction of the loan, we will complete this one, then only we will submit all the document to the sanctioning authority. Sanctioning authority, again they will verify. If at all any deficiencies are there, again they will ask the credit officer to fulfill that one, then only they will sanction. Verification of CIBIL report. CIBIL report is compulsory. Why? Because today, if at all any company or borrower or director, if at all we ask, any loans are with other banks? Sir, I don't have any loans with other banks. I am a credit aversion. But my tax consultant told that take the loan from the bank to avail some benefits of the tax, etc. Once I have taken the Aadhaar number and PAN number of that particular director enter into the schedule, nearly 20 to 30 pages will come. This is a nominal statement they are, a normal statement they are giving to the bankers. That's right. Anyhow, we are collecting the Aadhaar card, PAN card, etc., etc. Definitely, we will verify in the CIBIL score. In the CIBIL also, 4 companies are there. TransUnion, one company. Other companies, the 4 companies are identified by the Reserve Bank of India. Equifax is one company. So 4 companies, among the 4, normally we use it to take the CIBIL, that is a TransUnion, etc. Okay. In the CIBIL events, we have given the particulars. Then the director who availed loans with various banks or the company who availed various loans in other banks, all are reflected in. This type of a CIBIL report, not only for banks and the bank's credit proposal, as a IP, whenever you are processing the particular personal guarantor to corporate data, you take CIBIL report. Borrower will tell, I don't have any assets. Once the borrower is taken any loan with the bank by giving collateral security, that security is in his name. The same bank has given a loan. So we can get the assets through CIBIL report. That is one source. I'm not talking about this is the only one source. This is one of the available information to get the assets of the borrower. Identification of segment of the application. Here, whenever the company's CIBIL report is taken, it is called commercial CIBIL. Whenever individuals like directors we are taking from the CIBIL, it is called individual CIBIL. So CIBILs are two types. One is a commercial CIBIL. Second one is individual CIBIL. Next one is identification of segment. Today, most of the companies, the revised guidelines of MSME is there. Up to 1 crore plant and machinery or 5 crores turnover, that is micro, and up to 10 crores plant and machinery or 50 crores turnover, it is a medium, and up to 50 crores plant and machinery and 250 crores is the turnover. These are to be classified as the MSME. So, maximum amount for MSME is the turnover of the plant and machinery investment 50 crores and the turnover is 250 crores. So normally banks will give loan for working capital on projected turnover. If the projected turnover is 250 into 20%, 5% borrower stake, 20%. 20% means 250 into 20, Andaz amount is 50 crores. We will give 50 crores is eligible for working capital. 50 crores is eligible for plant and machinery. So that's why 100 crores that MSME. Once MSME is there, why you are categorizing segment? Once MSME is there, some types of concessions are there. Margins are less. What is meant by margin? Margin means once the loan is given, the asset is created. Out of the loan asset value, bank will give 75%, borrower stake is 25%, or in some cases, some banks, they will reduce 25 to 20 or 15 or 10 like that. But in case of MSME, normally we will take a lower margin and the bank loan will be higher. So that's why the segmentation is also very important. This segmentation is useful for pre-packed insolvency resolution process. That is applicable only for MSME. Second one, this categorization is also useful. Section 29A, that is, if at all the borrower is an MSME, then he is also having a right to submit the resolution plan. For that, what is the categorization? What is the segment of the loan? That also you take. While sanctioning the loan, bank will give one letter that is called sanction terms and conditions letter. In some banks, it is called arrangement letter. So once you have taken that one, okay, bank based on MSME only they have sanctioned, then you can cross-check with the borrower. If at all he is present, he is going to submit the resolution plan, we should not deny. We should not deny. Why? Because he is eligible to submit section 29A. Out of the ineligibility, except MSME promoters. For that also. That's why I am the correlate with the bank paper with the IBC means this is the purpose. And the type of loan, whether it is a working capital or medium term or long term or fund based, all these things are fund based. Bill discount is also fund based, non-fund based. Once the banks are giving a non-fund based, definitely some security is available. Definitely some cash margin is also available with the bank. Suppose one non-fund based 100 crores guarantees has taken, definitely 25%, 25 crores he has given the fixed deposit to the bank, or 20 crores. It depends upon the corporate client and the relationship with the bank and the discussion powers of the bank, all these things. So here, once the non-fund based business guarantees means immediately your thought will go to that. No, okay, guarantees are there. How much cash margin? What type of collateral security given for the balance amount? That also comes under the purview of the CIRP process. So the type of loan to be taken. Second one, whenever the loan is given, the asset given by the bank for the loan given by the bank for acquiring some asset, that is a primary security. You can ask, if at all bank is asked, the particularly working capital 100 crores defaulted, then you should raise one question. What is the how much stock and how much the receivables? Then you verify whether stock is there or not. If a stock is not there and he has availed, some fraudulent transaction may be there. So here also we can cross check, and if the data are account receivables. If at all he has given monthly account receivables so and so, then you check account receivables, whether account receivables are there or not, because they have to pay to the company. Whether the company is undergoing a CIRP or not, that is immaterial for the data. Okay, company is going for CIRP, I need not pay. That is not correct. Once the bill of exchange is given, the bill of exchange and goods are supplied, goods received, note is also there, then the debtors are obligation to pay to the bank. So that's why for short-term working capital, immediately, where is the stock? Last statement he has submitted 3 months back. In the 3 months back, if at all he mentioned 80 crores worth of stock, then you go to where is the godowns? Where this 80 crore stock? Then bank submitted stock statement. In the stock statement, stock number, the amount and the invoice value, all are available. Ask where it is available. Then you can make a conclusion, the puff transaction at that particular point of time. You need not wait this one. Sir, here, what I told is, within 1 month, we can get the overview of the company, if at all you are having good knowledge in the banking system. Some other people, even though the bankers, they may not involve in the process. Some other people, even though they are bankers, they may not work in the credit management and they may work in housing loan, car loan, education loan, like that. Big loans, cross-checking. So this loan, stock, where is the stock? This loan, debtors, where is the debtors? Then through that, we can find out the particularly fraudulent transaction if a stock is not there. But he has mentioned the stock and get a drawing power from the bank. And that's why. Next, bills discounting. The bills discounting is also one type of this one. You supplied the stock. The creditors are given, the debtors are given the particular the bill of exchange, and he has received the goods, and invoice is also there. Once the bills discount is returned, then you can ask the particular debtors to pay to the company. Some other people, what today, that is my only observation, may be correct, may not be correct. The complete analysis of balance sheet and bank statements, all these things are not thoroughly checked. Because today, the CEO of the company, they have identified the CEO of the company, the CIRP process company's CEO is none other than the IP only. If you are unable to gather some of the people, they are spending only one hour or 2 hours. It is not correct. Once one big company is there, one case is sufficient. Why? Because a lot of work is there. But some people, they are handling 5 cases, 6 cases, 5 companies handling means it is not a simple task. Whatever assets are there, whatever liability, whatever the claims are there, they will settle they will, whatever the assets are there, assets are to be registered to claims and they want to dispose it off like that. That is not the insolvency professional quality or the function. Next, new or renewal or enhancement or additional limit or fund based or non-fund based. Particularly whatever the loans are given by the bank from time to time, they will enhance working capital. Every year they will renew. Once they are renew means whatever the earlier limit is there, at that time, what are the projections we have taken? Whether the borrower is a projection sales are achieved or not. If not, what is the achieved projections? Then accordingly, we will reduce the limit. If at all projections are, the actuals are more than projections, then banks may consider for enhancement also. The enhancement also. So, that is new proposals are there, renewal proposals are there, enhancements are also there. Enhancements. Next one is additional limits. Sometimes the company product demand may be more in the market, or some new projects may arise. They require some additional limits. For that also, the bank has to provide the additional limits. For that, once the banks are giving additional limits, and whatever the earlier limit and this limits, they will consolidate. And whatever the earlier property given by the company, that is also extended to the new limits. And whatever the charge earlier is there, the modification of charge with the ROC, they will do. All these things are there. Anyhow, non-fund based business. In non-fund based business also, they will take additional LCs or BGs. They will not stick on to the earlier one. They will modify that one. Temporary or existing ad hoc limits. Sometimes the banks, if the borrower requires the additional temporary, that is up to 15 days or 1 month, or ad hoc 3 months or 4 months like that. For existing borrowers, based on the sales, based on the financial statement information, they may sanction the additional limits also, or ad hoc limit or a temporary drawings also. For that, they will take the link documents, additional documents. Why I am telling all these things means, whenever the financial creditors have submitted claims, we have to go through the claims. If at all any problem arises, then the NCLT may comment on the errors and omissions on particularly IP who is handling the cases. Appraisal verification, source of income, financial statement, ratio analysis. Normally earlier, the banks, particularly banks, based on the financial statement of the last 3 years or 5 years, they will calculate whether the financial health position of the company is good or not, whether it is increasing trend or a decreasing trend. They will see, and accordingly how much loan is required, they will assess. And the ratio analysis, normally the current ratio, current assets divided by current liabilities, quick ratio, current assets minus stock divided by quick liabilities, or debt equity ratio, long-term debt versus equity, or sales turnover ratio, or particularly gross profit to sales ratio, or gross profit to net. All the ratios they will calculate. And these ratios, based on these ratios, they will make a conclusion whether the company is eligible for the loan or not. So, this information also later on, when the company deterioration starts, and why the deterioration starts, particularly the forensic audit or transaction audit, you are endorsing it to the one professional, that is a transaction auditor. There is no name in IBC that a forensic auditor, only transaction auditor, but in general nomenclature, we are using forensic auditors. Okay. To tell or to guide to the transaction auditor, you should also all balance sheet at one place. For this also, a lot of support will be provided by the CFO or the company's chief financial officer or the accounts department, like that. Now, digital footprints. What is a digital footprints? Whenever the company doing some activity, all or somewhere it was recorded. Somewhere it was recorded. If the company is purchasing goods or selling the goods, if you verify the GST returns, if the GST returns are counter check with the financial statements, it should be tallied. It should be tallied. If not tallied, then some wrong thing is there. So that's why today the banks, they are using business rule engines, B or is. B or is. Earlier, most of the people, bankers also, I'm credit expert. Today, that is not required also. Not required. Once the business rule engines are there, the system will calculate and give the information to the banker. This much amount is there. The system captures the income tax returns. The system captures the GST returns. The system captures other banks, which bank he has availed, that is called open banking system. Through other bank servers also it will catch and get. So that's why even State Bank of India, we are adopted the business rule engines. Within 1 hour, the X-ray of the company we will get it. X-ray. Why I am using X-ray means normally for medical treatment, health of the particular person, doctors will ask X-ray. As a financial, we require X-ray of the company. That is also possible. Projections. That is to be verified. Economic viability, repayment capacity, and margin money, government subsidies in backward districts, all are to be verified by the banks while giving this is all or before giving the loans to the companies. Primary and collateral security. So the banks, whenever they are asking loan, particularly for construction of a building or plant and machinery, that is called primary security. For this, the borrowers are giving collateral security also. That is a land, all this. For that, we will take the valuation reports. The values are empaneled by the bank. These values, they will give the particular valuation reports to the bank. They will verify, they will visit to the unit. They will verify the invoice in case of fixed assets or whatever the plant and machinery. And what is the life, what is the depreciation, whatever the best valuation methods are there, they will verify and then they will give the valuation report. And at the same time, primary security, which is going to be purchased. Suppose the electricity projects are there, thermal projects, example. If they are purchasing diesel generator set, which is 10 crores or 20 crores, whatever the amount may be, we don't know. The 10P or 10, you will bring one invoice from one company. Sir, this amount to be dispersed. Whether that is a 10 crores or 20 crores, we don't know. What we will do is, we will send this invoice to the Dun and Bradstreet, D and B. Like that, some investigation, the financial investigation agencies are there. So I will send the Xerox copy to them. Then they will verify and they will provide the full information about that one. So, full information about the invoice, what is the company, when it was established, how many diesel generator sets are supplied to the power projects, how many they defaulted, what is the latest models that are available, what is the price, X showroom price or whatever the factory price is there, whether this invoice is genuine or not, all these things, one report will be provided. So here, the valuation, the value of the particular, the primary security also, sometimes we will use the investigations agencies like Dun and Bradstreet also. So banks empanel value normally for collateral security. Not only that one, before giving the loan, we will verify TIR, Title Investigation Report. So we are empaneled the advocates. Whenever we are getting any title deed of the company premises, land, buildings, then we will send the title deeds to the empaneled advocates. They will verify and whether it is a genuine or not, and whether that is to be taken for creating the equitable mortgage by the bank or not, based on their suggestion, we will take or not to take. So the title investigation report from the empaneled advocate, whatever the properties they are going to give, all are to be verified by us only, and we will send the Xerox copies to the empaneled advocate. The empaneled advocate, as per the standard format given by the bank, they will fill it up and they will give the recommendation whether the title deeds are marketable or genuine or any legal issues will happen. All these things they will cover, and at the end also they will give the concluding remarks also. So here, today what is happening means fabricated, colored Xerox title deeds are coming. So fabricated colored title deeds are coming. So that's why the banks, they will ask the empaneled advocates, go to the registry office, search report also. the SRO office, sub-registrar office, and in the sub-registrar office, some additional information is available. For this one example I am quoting here, what is that example is, the one person purchased the property, commercial property of other person. That is, a deal was completed. Total deal is 10 crores. 8 crores they have paid advance. Remaining 2 crores after registration. In the meantime, they have taken the opinion of the advocate, and they have taken the encumbrance certificate, all these things. And this property is already mortgaged to the bank. And they have paid that amount to the bank. And they released that document. And the borrower, they particularly that who is the seller and buyer, they visited to that sub-registrar office. At the sub-registrar office, they are denying to register that property. Why? Because High Court orders are came. So here, whenever such with the sub-registrar office is there, some additional information. So one day before, if you visited, if any court attachments or court directions to the SRO is there, and the SRO in the computer system also, don't transfer this property to others. Why? So-and-so High Court order number so-and-so, so-and-so, so-and-so. Then whatever the 8 crores paid. Now, once the verdict is given by the High Court, then only the proposal will and the transfer of documents will happen. So that's why, to safeguard the bank's interest, most of the banks, they will ask the such report also. And the compliance exposure norms. We are not giving as much as he required. For sector-wise norms are there, that is called exposure norms. Not only that one, we don't want to give as much as he wants. Why? Because the bank credit policy guidelines are also there. The credit policy guidelines, the board of directors of the bank, they will inform to the branches and the limits for each and every sector or loan, and what is the maximum amount. Every year, the credit policy guidelines are to be reviewed, and the board of directors approval and the credit policy guidelines are to be sent. In the credit policy guidelines also, particularly the corporate loans or the limited liability partnership, LLP loans, or mid-corporate or large corporate, maximum exposure, how much that is the limits, margins, how much to be taken. Margin means when the loan is given by the bank to procure the asset value, if at all it is 100, the bank will give 75 or 80 or 85. It depends upon the segment, it depends upon the client also. And how much collaterals are to be taken, 100% or 50% or 60% of the asset collateral or not, and the rate of interest, they will mention all these things in the particularly the credit policy guidelines. And earlier also I told about a compilation of opinion reports. Opinion reports are to be compiled. The borrower, the guarantor's opinion reports is also to be compiled. And a CIBIL report, earlier also I told about scoring. In the CIBIL reports, if at all any written off is there, or write off is there, or compromise is there, or the court settlement or bank settlement is there, then the bank will again review the account. They don't sanction normally. If at all one bank is a write off the earlier account, the borrower character is not up to the mark. So in companies, some companies that already defaulted and the bank is written off and write off, then the banks new loans they will know. Some bank compromise. Some companies, they will take the loan from XYZ bank and they paid only the compromise amount. Out of the outstanding, they paid 50% or 60% or 70% and compromise and settle the account. That type of, the character of the company is not up to the mark. That's why the scoring is also very less. Not only this one, the memorandum, articles of association, we will take the limited liabilities partnership or partnership deed. In case of partnership, normally in CIRP, it is only companies, that too LLPs registered under ROC. We will take the pollution control certificate. Today, environmental friendly industries are to be developed. We should not give loans to those who are creating water pollution, air pollution, and other things. And the MSME certificate, in case they are telling they are claiming for MSME, the MSME certificate, and IT returns for the last 3 years. So the company, whenever they are going to approach, they are approaching the bank for a higher amount or renewal of the loan or old loans enhancement, then we will take IT returns. IT returns are submitted by the company. What is the revenue? What is the profit? How much the tax paid? How much dispute is there? All these things. Not only that one, GST returns also. The GST returns, up to what date they have filed, whether no dues or nothing, and not only that one, EPFO. Once the company is employees are more than the threshold limit, and the provident fund or pension fund or ESI or EPFO, employees provident, whether monthly or TDS, whether they are remitting to the particular authorities on monthly basis or not. If at all dues are not there, they will directly approach the court. Then it is not a good sign to the bank. That's why this type of this one, banks are not encouraging. Shoot filed accounts. How many shoots are filed against the company? Whether it is a consumer or supplier or the debtor or the bankers, that also to be verified. Then only we will verify at the pre-sanction level all these things. Then we will prepare the pre-sanction report by the credit officer about the company, whatever I discussed, all these things in a sequence manner, and his observations are mentioned against each and everyone, and then he is mentioned how much he is eligible for the loan. All these things he will mention as per the product guidelines. Product means working capital is one product, term loan for acquiring machinery, another product, or LC, another product, bank guarantee, another product, and how much margins he is defined. All these things he will mention in the pre-sanction level. Sometimes the banks are also taking loans from other banks. That is called a takeover advance. So some companies already with XYZ bank, they wish to move to ABC bank. So ABC bank verify the why they are moving, what is the reasons, whether reasons are genuine or not, and some companies they are moving for getting higher limits, which is not correct. And some companies say if at all rate of interest is more, then they can move. There is no harm at all. If the rate of interest equal or less than the other bank, then what is the reason? In that case also, Reserve Bank of India stringent or strict guidelines are there. Why you have taken over that advance? Earlier also, some other loans taken over by the banks after 3 months or 6 months, it was a turn into non-performing asset. It was a turn into that is called incipient sickness. That is called incipient sickness. So the takeover advances, lot of the Reserve Bank of India also given strict guidelines or stringent guidelines. In that case, whatever the existing accounts are there with the other bank, the total accounts are to be taken, account statements are to be taken, reasons, strong reasons, then only takeover advance are there. In the takeover advance also, the who is going to acquire the loan, the bank guidelines are also there. But sometimes the loan limit may be higher, and banks, they are not interested to take a higher amount and only limited amount. Then two or three banks come together and take the loan. That is called consortium or multiple banking finance. That is called consortium or multiple banking finance. So takeover loans are also there. Takeover loans or consortium or multiple banking. So consortium means more than one bank. Multiple bank means the borrower will avail working capital in A bank and non-fund based B bank or term loan C bank, bills discount D bank, like that. And for each and every loan, he will give separate security. One bank, they will give building, another bank, they will give land, another loan, they will give plant, like that they will take. Okay. So whether it is a consortium or a multiple bank, in the consortium, normally more than one bank will participate in the, for a borrower, banks and the consortium leader, tripartite agreement is also there, and they share, all these are defined, and every month or fortnight, every month or by month or 3 months, they will conduct a consortium meetings, and the consortium leader will apprise the latest status of the bank to the particular members, consortium members. Multiple banking, there is no problem. The borrower himself is availed the loan from various banks. That is called multiple banking finance. Multiple banking finance. Multiple banking finance. Now, is there any doubts up to this point of time? Sir, is there any doubts up to this point of time? Because I discussed some aspects. Any doubts are there or not? Is it understandable or not? Sir, any doubts? Shall I proceed further? Shall I proceed further? If doubts are there, then I will try to clarify your doubts. Anil sir, Akhilesh sir, Madam Bhagilakshmi, and Gaurav, Kamal Kumar sir, Saha sir, Sachendra, and Sandeep, and Mindhuna Kesi. Any doubts are there or not, sir?
No.
No, sir. Is it clarity is there, sir?
Yeah.
Any gaps, because the whatever I am telling, because you are working in bank, sir?
No.
Okay, you working in bank?
No, I have not worked with bank. I am a practicing professor.
Acha, acha. Because if at all banker means definitely 100% they will get the information. And non-bankers, some gaps may be there. I want to fill up that gaps.
Right.
But now it is easily to understand. Correct, sir?
Right.
Okay, sir. Thank you very much. Now I will proceed further. So before giving the loan, whatever the process or activities that are to be compiled by the bank, I will narrate it in a sequence manner. At any stage, at any place, the documents are not provided, the information is not correct, bank will not process the loan further. They will stop. Once the document is there, then only they will process. Or whatever the information they required, if that is provided by the promoters, then only they will process. Now coming to sanction process. Once for any proposal, 2I concept is required. 2I concept. One is the processing officer and the sanctioning officer. In some cases, processing officer, recommending officer, and sanctioning officer. And today, our CIRP cases or PPIRP cases, the ticket size is a big one. That's why these are to be sanctioned by higher level authority. Today, in most of the banks, higher level authority individuals are not there. It is a group of people that is called credit committees. That is called credit committees. So the credit committees, they will verify the proposal. Whatever the proposal submitted by the credit officer, they will verify, and then accordingly they will process they will sanction or reject, or some additional information. They may sort all these things on the proposal. They will finalize and send back with a sanction, or send back with additional information, or send back to the concerned officer with a rejection of the proposal. So the sanctioning process is to be done by higher ups other than the officer who processes. This is a stage 2. Whenever they are sanctioning the loan, they will look into the powers of how much power they are having. Suppose earlier I am the Assistant General Manager of State Bank of India. Up to 1 crore housing loans I can sanction. Up to 40 lakhs car loan. Up to 30 lakhs education loan. Up to 10 lakhs personal loan. That is within my discretionary power. These delegation of powers are available to the concerned officer based on their designation. Even committees also, delegation of powers are there. Small committee, big committee. Small committee, less delegation. Big committee, other delegation. Big committee means the committee members are higher grade people, experienced people. So the delegation of powers, first they will look into. So this proposal is 100 crores. Whether it falls under my delegation of power or not, whether the credit committee power is there or not, compliance of statutory and restrictions of the loans and other restrictions for loans and compliance, whether the compliance is completed by all the compliance are completed or not. Today, what is happening means, if at all company is releasing the water or air or sound pollution going to be, and without any pollution control board certificate, the banks will reject that proposal also. Now the ESG, environmental sustainable, the governance, the finance is there. In that also, responsible lending is also there. So in the coming days, responsible lending, whenever the loan proposal is sanctioned by the bank, whether it is a home loan or car loan also, whether it creates a problem to the environment or not. Today, most of the banks, car loans are shifted from diesel to power, electric cars. Electric cars, they don't damage to the environment when compared to the diesel or petrol. Or suppose particularly housing loan. Housing loan also, whether on the roof, whether their solar panels are fixed or not. Next, in the gated community loans also, whenever we are giving any loans, how much trees are destroyed, how much trees are planted, all these things we will look into. Then net zero emissions, the target of the government of India as per the Paris Agreement, we have to achieve. That is called responsible lending. Okay. Then they will verify the compliances and they will second check, because the committee consists of 5 to 6 people or 3 to 4 people. The size may be differ from bank to bank, and the size may be differ the other areas also. So the stipulations in sanction and the terms and conditions, whatever the terms and conditions, they will stipulate some in sanction. Now, you have taken only 45% of the collateral security. Please increase it to 60%. No, you have given the turnover so and so, that is to be rechecked once again. So whatever the stipulations is there, the stipulation, then accordingly the loan is to be sanctioned. Accordingly, the loan is to be sanctioned. Then the terms and the conditions they will fix. And once it is sanctioned, the committee will send this sanction to the higher ups for their information and control. So here the processing and recommending and go to the sanction to higher ups for controlling. This is the layer. This is a layer under the sanction process. Now coming to the post-sanction. In post-sanction, lot of formalities to be completed. Lot of formalities to be completed. So once the loan is sanctioned and controlled by the higher ups of the sanctioning authority, then they will send the sanction letter to the branch. Okay, the committee has sanctioned 100 crores or 200 crores to the particular company, and then you can process by following the bank instruction, by following the committee, whatever it is there, all these things you have to follow, and you follow that one, then you submit, you get a documentation, all these things. From the, don't deviate from any instruction from the bank. Here also, some of the papers, some of the documents, directly or indirectly, it may be useful to the insolvency profession during either CIRP process or PPIRP process, or at the time of a personal guarantor to corporate data rights. That's why this learning class, particularly this learning class, is useful to the IPs to better understanding of the credit management process of the bank. Next, when sanction letter came, the bunch of sanction again came to the branch. Whether all securities are received by the branch before disbursement. In the collateral security, they mentioned, I will give this security, this security, this security, this security, this security. These are 20 securities I will give for the proposed loan. First of all, being a credit officer, first gather all the securities and create equitable mortgage. What is the equitable mortgage? In the bank premises only, whatever the securities are there, they will enter into the equitable mortgage, and they will enter all the particulars, and that is the clerk will enter, verified by the officer, countersigned by the higher officer, and this is as per the Transfer of Property Act. So actually, equitable mortgage validity period is 12 years. Equitable mortgage validity period is 12 years. Once The mortgage of property was happened at the branch after 12 years. That equitable mortgage is not that after that 12 years, that equitable mortgage is not valid. It is a staled one. It is a staled one. So the equitable mortgage, all the properties, whatever the company properties they are giving, all that to be created equitable mortgage. Second one is sometimes whatever the documents are given by the corporate debtor, sometimes the document, the advocate will also tell, no, instead of equitable mortgage, it is better go for registered mortgage. Because this paper is missing, that paper is missing, this linked document is missing, that linked document. In that case, there is no other alternative to the bank except to go for registered mortgage. What is a registered mortgage? The bank and the borrower, we will go to the register office and register the document. At the same time, we have to create a charge under section 77 of the Companies Act with the register of companies. Whenever the company is taking any loan, that is to be charge is to be created with ROs. Then only the validity of the particular securities is available to the bank. Otherwise, if not, then bank will lose the particular security as a collateral security. So the creation of a mortgage. So the creation of mortgage, the ROC that is to be completed, the borrower will also accept. All these things are there. Next stage is documentation. Sometimes they will take the stocks or debtors under working capital or building construction for production department or office building. Sometimes they may acquire the plant and machinery also. For all these things, particularly documentation, relevant documentation is there in the bank. What is a relevant documentation? Suppose take, for example, working capital loan is there. Normally for stocks, we will take hypothecation. Why? Because stocks are with the borrower, that is corporate debtor, the rights of the with the banker. Once he is not paid, the bank can seize and sell it in the market. Hypothecation. Earlier, pledge is also there. The borrower, whatever the stocks are there, that is stored in his godown, bank will put a lock and key and put security also. That is called pledge. Then we will take a pledge agreement. Bank legal officers, they will design what is a pledge agreement, what is a hypothecation agreement. Sometimes the company is offering the shares or whatever the NSCs or whatever the securities are. That is assignment. Assignment we will take. Or lien. NSCs means we will take a lien on this one also. So the documentation, proper documentation. But here, as an IP, whenever any claimants, financial creditors are claiming the under FC category, that is a financial creditor category, you have to verify whether the documents are live or time barred. If documents are live, accept the claim. If documents are time barred, reject the claim. So even all banks, they may submit their claims, but whether the claim along with the document, they have to submit. If the document is time barred, suppose a time barred, whether it is a time barred or not, the Limitation Act to be verified. In the Limitation Act, Section 18, Section 19, that is acknowledgement of debt and part payment of debt, is there. You please verify whenever the claim, suppose take for example, One operational creditor is there. Operational creditor submitted the invoice for the goods supplied. Company also acknowledged the goods, and the company also promised to pay the amount. And now they have submitted the claim. The claim is the bill of exchange date is 4 years back. Normally, bill of exchange is the validity period is 3 years. So after 4 years means the bill of exchange is not valid. Then you reject the claim, and the reason is on account of this is a time-barred document. The validity period for the bill of exchange is so and so, and it is a time bar like that. So that's why the documents, whatever the documentation they have completed, all these things are to be thoroughly verified by the IP, the claimants, whether it is a financial creditor or operational creditor. Today, what is happening? Time-barred documents are also admitted. And if at all you are admitted time-barred document, suppose one X bank is there, X bank. They have submitted 10 crores or 20 crores. And now they are 60% of the total claims, the financial creditor. Now he is having voting power 60%. And the document is a time barred. That is not seen by the IP. And today, whatever the decisions are taken at COC, that is not valid. Why? Because he is not eligible and he is not to be admitted. That's why this is the problem is also arise. So the time board documents, documentation purpose means whatever the document, whether it is a financial creditor or the operational creditor, whatever the document submitted by them, that is to be verified properly. Next, the Stamp Act. For every document, as per the State Stamp Act, properly stamped. Even as per Stamp Act also, less stamp is not admissible in the court of law. Less stamp is not admissible in the court of law. Sometimes the court may allow the eligible amount and the existing amount difference and 10 times or 20 times whatever the amount is there. If that is paid, they may allow. But this type of situation not should be arise. So all Stamp Act, that's why, sir, here, why I am telling all these things is, even LIE, Limited Insolvency Examination, the syllabus is covering like this one. Registration Act, Sale of Goods Act, Transfer of Property Act, all these things. So the Stamp Act, banks are also, from time to time, whatever the prevailing Stamp Act is there, we will affix on the document and take the acknowledgement from the bank. And Registration Act. Actually, registration, particularly the registration, equitable mortgage or a registration office, that is also to be verified. And the CIRP. Today, what is happening is, some of the borrowers, they are taking loans from different banks. And if the companies are there, the company anyhow, we have to create charge in ROC. If at all we have forgotten, the company may approach other bank also. Other bank, whenever they are verifying the ROC charge is not created means there is no loan. We should not believe that one. That's why Government of India, they have created one system that is called Central Registry of Securitization of Asset Reconstruction and Securities Interest of India. That is also to be fulfilled. And the terms and conditions. Once it is entered, next, whenever the borrower is approaching other bank, then they will verify in the CIRP also. Once the CIRP verified, the same TAN number or PAN number, whatever the basic information given, then automatically the message will come. Already this title deeds are mortgaged to so and so bank for so and so loan. All information is available. Next, the terms and condition. Sir, here, whenever the claims are admitted by you, you have to take the terms and conditions letter also, particularly the financial creditor. Financial creditor terms and conditions letter. Whatever the documents, Xerox copy, terms and conditions, if possible, account statement also. The account statement also. How many people are verifying the like this? So once one bank, they told that he is defaulted with us for 20 crores, 62,758 like that. If they submitted only the limit sanctioned by them, that is not suffice. The account statement, the current account statement for the last 1 month, or the document executed, or the terms and condition. If you know that the terms and condition, what type of security he has given, whether the rate of interest or not, all these things you can verify. That's why the terms and conditions later also banks are taking, and this is to be signed by the banker, this is to be signed by the borrower, this is signed by the guarantor also. So signed by the borrower, signed by the guarantor, and all people they will sign it. That's why the terms and the conditions letter is also one important document that is to be taken by the bank, by the IP whenever the claims are admitted. Sir, now shall we take a break for tea for 10 minutes? Sir,
Yes, sir.
okay. 10 minutes tea break.
Okay, sir.
So now 34, 44 we will meet.
Okay, sir.
Okay, sir. Shall I start now?
Yes,
Am
sir.
I audible?
Yes, sir. You're audible.
Okay, sir. Okay. Okay. PPT is visible, sir?
Yes, sir. It is fine.
PPT is visible?
Yes, sir.
Yes, it is visible.
Okay. So now we are in a post-sanction process. It is a lengthy process when compared to pre-sanction and the sanction process. In the post-sanction process, whatever I told that will be continued, and the list of documents required, that is inventory. Normally, the documents, particularly the bank documents, inventory, what are the documents to be obtained from the company by the bank, all are mentioned in documents execution register. Documents execution register. First of all, the claims are to be accepted means the all documents are required. Whenever we are filing a case, earlier, not now, a case in courts, we used to file all the documents. Even a OA, original application, in debt recovery tribunal also. And the sequence of documents we will submit it to the DRT also. Whenever you are verifying the particular claim, whether the financial creditor submitted all the documents or not, that is to be verified by you. So, proper execution of documents are also very important. Suppose, take for example, one company submitted, one financial creditor submitted that he availed 10 lakhs or 20 lakhs or 1 crore or 10 crores. You have to go through the document. If any material alteration is there, that a document is not valid in the court of law. Sir, IBC is a different recovery process of the companies. It doesn't mean IBC, lot of concessions are no concessions. Even Limitation Act, that is applicable. And if at all cuttings are there, cuttings are not signed by the company in the document, that is called material alteration. That is not to be accepted. And the verification of a personal and a corporate debtors. So, whatever the personal guarantors or corporate guarantee is there, their net worth, opinion report, all these things are to be verified. Complaints of a payment of stamp duty as per the Indian Stamp Act, that is to be verified. Inter-C agreement in consortium finance. Suppose on behalf of all banks, one leader is filing a claim that this much crores, this is funded by this much banks, then you have to see the inter-C agreement also. Once the inter-C agreement is not there, the other documents may not be valid. And the exchange of credit information under multiple banking. What is the information he is providing? The multiple banking, that also is required. Whether charge has been registered with registered on security as per the sanction. Sir, here, suppose one company is one bank submitted that the company is defaulted 10 crores. Very good. He has submitted hypothecation agreement for working capital. Very good. Terms and conditions letter. Very good. Whether the company is the bank is created charge with the ROC or not. Sir, claims is simply whatever the papers they submitted. Today, what is happening in the real sense means whatever the papers they are submitting, simply whether it is correct or not, they are verifying and admitting. No. First of all, once the loan is taken by the company, whatever the papers they have taken by the financial creditor, all are to be submitted along with the claim application form designed by the IBPR. Whether it is a hypothecation or lien or pledge or equitable mortgage or registered mortgage or charge, all papers. Later on, this will give lot of comfort in handling liquidation process also. Because once equitable mortgage is there, the property is in the name of the bank. Next, you have to take the relinquishment letter, whether he is going to auction or that is to be continued by the RP or not. Insurance policies. This is also another important in post-sanctions. So, being an RP, you are the CEO of the company. Okay. Some stock is there. Plant and machinery is there. Health insurance policies, the workers are also there. Earlier, once the company is in running condition, all properties, whether primary or collateral or that particular health insurance, all our insurance policies are to be continued. Once the company is in default, particularly the stoppage happened. Okay, so here the insurance policy, both the primary and collateral security to be obtained. So the primary security means stock. The collateral security means whatever the mortgage property is there, that is to be also to be verified. So that is also to be ensured. Normally in the insurance, bank will take 110% of the limit of the loan or value of the asset, whichever is higher. So the insurance policies are duplicates are available with the company and originals are with the bank as long as the loan is continued, as long as the asset is available. Suppose stocks are lifted, no stocks are there. No stocks. Then bank will stop, take a letter that no stocks and they will not insure for the stocks. Once the asset is not available, banks will take from the borrower that asset is not there. Then they don't insure. So these are available in the loan file that is maintained by the bank. And insurance policies are very, very important. Suppose after taking over the particular company by you, if at all any fire accident was happened, and stock is there worth of 50 crores worth of stock, immediately you have to contact the financial creditor who financed the particular company stocks and get the insurance policy and make the claim. That is your responsibility. During CIRP process, end to end to be handled by the insolvency profession. There is no exemption, no exemption, no exemption. So primary and collateral security, even buildings, suppose the floods are come during CIRP, the building foundations lost and the building is also damaged. Then you are going to auction that building in case the resolution plans are not received, then going to liquidation, then it is a problem. Then you have to claim to the insurance company that then you will get a substantial amount and this amount can be used for distribution of to the claimants and utilization of funds and use. Bankers, from time to time, whatever the loans they have given, monthly intervals they will verify whether loans are properly utilized by them or not. If not, then they will send one letter also. You have on where the so and so the visit, we found that stocks are not there and the funds are diverted to other purpose. Please please explain the reasons for that within so and so date. Then this type of correspondence is useful for you, and submit your observation to the NCLT about the PUF transaction. So the company has to appoint the transaction auditor. You have to give some your opinion whether transaction audit is required or not. These are the supporting documents. And post sanction report, end user funds. Whenever the loans are given, banks will prepare not only pre-sanction report, post-sanction report also. The post-sanction report, whatever the observations are there, that observations are very helpful to the IPs. They will jot down whatever the irregularities in dispersing of the loan or utilization of loan by the company. And that document is also very much useful for identification of a fraudulent transaction. Proper and timely monitoring of borrower. Banks, they are properly conducting the field visit, term loans, or cash credit, or overdraft, or book dates, or bills discounting, and other end. If at all any wrong the deviations are there, the deviations are to be mentioned. The deviations are to be properly mentioned. And this is one of the important area. This is the deviations are to be properly addressed. So term loans, cash credit or overdraft limit, book dates or bills discounting, whenever they are visiting to the company, their observations are that is a monthly unit visit observations are there. If you scan that one, then you will get some idea about what is happened in the all these things, sir, within 1 or 2 days. If you concentrate with the financial creator, definitely you will get a full picture about the company. So financial creator, they will simply submit the application, they will appoint you, and you are directly reporting to the particular company, and you are interacting with the people. But what happened, what purpose they have taken for loan from the financial creator, how it was misutilized, what are the transactions that was happened with the financial creator, what are the terms and the conditions that are given by the financial creator, whether it is accepted or not, whether board resolution, for what purpose they have given, and what type of securities offered by the corporate data to the financial creator, what is the primary security, what is the collateral security, and when the transaction was stopped, and what is the unit file, if you scan, definitely 100% the quality of a CIRP or PPIRP will happen. Now, particularly every year, the working capital limits are to be review or renewal of the borrower account. What is the difference between a review and a renewal? Every working capital loan, before completion of 1 year, 1 month before, bank will call the financial statement. Whether to continue the working capital further or not, that is to be decided by them. If at all they want to continue, they will mention all they will require from financial information from the borrower unit. They will go through that one. And if at all financial health position of the company is good, and the sales are increasing, profit are increasing, whatever the sales and purchases are there, all are routed to the bank account are not verified, and they will renew for one more year. Renew of the existing loan limit for one more year. And if a loan, if sales are increased and borrower requires additional funds based on the particular performance, bank will give additional limits also. If the company is not up to the mark, not follow the terms and condition, they will stop the loan, call the advances, call up the advance, call up the advance. So the proper procedure for renewal, whenever the renewals are happening, analysis of financial performance, any adverse futures, analysis of a financial performance. They will analyze the financial performance. Banks will analyze the financial performance. That's why the bank will ask the financial statement, whether it is a full financial statement or a quarterly financial Q1 or Q2 or Q3 or Q4 or a half-yearly financial statement like that. Then only if any adverse remarks are there, they don't renew. And reconciliation of analysis of audit with the QIS, quarterly information and projections. Today, what is happening is at the time of giving the loan for the new units or existing units, based on the projections on say banks are giving loan for particularly working capital loan. After 1 year, whether the projections are achieved by the borrower or not, that is to be verified. Repeated review should not be avoided. What is a review and a renewal? Renewal 1 year. What is a review means, sir? Still the audit accounts are not completed. And if you, in the meantime, you review roughly and review for 1 month or so. Then based on the information provided, they will review. Otherwise, the account is to be declared as a non-performing asset. So that's why banks, they to avoid that one, they will review temporary. Review is a temporary, renewal is permanent. Periodic balance confirmation. Sir, this is another important area. Normally, for large scale advances, banks are taking confirmation, particularly the confirmation of debt statements, confirmation of debt statements, confirmation of debt. Suppose a working capital loan is there. The working capital loan 10 crores available. They are paying, they are receiving, they are paying and they're taking, paying like that. 31st March, banks will take one debit confirmation that is called a debt confirmation letter. That debt confirmation to be treated as acknowledgement of debt as per section 18 of the Limitation Act. So once every year debt confirmation is there, the documents are revived and there is no need to take any additional document for revival of the documents. So debt confirmation. Normally banks, because in statutory audit of the bank also, the auditors have you taken debt confirmation. So up to 31st, whatever the outstanding is there, that is to be confirmed by the company. That is called, all these things are post-sanction formalities. All these things are post-sanction formalities. Sometimes the loans are turned into back. Once the loans are turned into back, first alert will be given by the system 30 days. Due date is today. First 30 days, the account is categorized as SMA0, special mentioned account 0. Second alert, still the borrower is not paid. The second alert is SME1, special mentioned account 1. Third one is special mentioned account 2, SME2. SME 2. So that's why the restructuring of accounts are, particularly the restructuring of accounts, why the restructuring arises means, once the loan is turned into bad, that is to be verified. First, whether it is a loan is in good condition or not. Once the loan is in not good condition, then whether it is a SME 0 or 1 or 2, after 2, if still is not paid for 1 year, then after 2, if not paid, that is to be categorized as a substandard account. After 1 year, if not paid, a doubtful 1 year category. After 2 years, 3 years category, like that as non-performing assets are there. What is meant by restructuring? Actually, the PPIRP arised, that is official restructuring of MSME loans. Official restructuring of MSME loans. What is meant to be PPIRP? Pre-packed insolvency. Borrower is facing some problem. That is a liquidity problem. Liquidity problem means the funds are not sufficient to meet the day-to-day working capital. And whatever the installments are there, he is unable to pay. Then he will request the bank, sir, please do the restructuring. Means instead of that 5 years a term loan, you make it as a 8 years a term loan. The working capital also, instead of 5 crores you have given, another 1 crore to be given, then automatically company will run into good condition. So that is called a restructuring. Today, banks are not doing the restructuring. Even though every year the Reserve Bank of India is giving suitable instruction to the bank, most of the banks they are not doing. That's why the pre-packed insolvency resolution process came into the picture. Next, the compliance of the prudential norms for income recognition. Once the loan turn into bad, that is after 90 days, then the system will stop the calculation of interest. The system will stop the calculation of interest. So here, once it is a stop, then there is no debits in the account. Suppose after 90 days, the system will stop the rate of interest. After 1 year, after 6 months only, the case was filed with NCLT. After 9 months only, the NCLT accepted. But the claim to be submitted by the financial creditor, when the system stopped interest, from that date to insolvency commencement date, he has to calculate the interest, and along with the account statement, he has to submit to the insolvency professional for admitting the claim. So this amount is not debited to the account. The system stopped. No, immediately you may have a confusion. Account balance is so and so. For that balance only claim to be submitted. Why he is talking about 6 months and 3 months, 9 months he is calculating manually and add. What is the reason means? Once the loan turn into bad, after 90 days not paid the account, then system will stop the calculation of interest on the loan. Till the case is admitted, the interest to be calculated manually and add back to the account. So while accepting the claims, you have to look into that one also and should file cases. Some of the cases, particularly the cases already filed with Debt Recovery Tribunal or Surfacing Act initiation, etc. And some civil courts, particularly on personal guarantors cases also, earlier they filed, and banks are vexed with that one. And then they filed the case with NCLT. They filed the case with NCLT. So that's why here you have to see when it was filed with the DRT, that correspondence also, if you look into, then you will get a good idea or fair idea about the particular transaction. So some of the cases earlier filed with the Debt Recovery Tribunal are now they are having the alternative recovery action is they can file with the NCLT also. And some of the cases where surface initiation was happened, now they can file with the NCLT also. So in some decided cases also I have seen, that's why I'm telling all these things. So here, period of limitation calculation, all these things are there. So you have to take into that one also, because still that court, the documents are in the court, and period of limitation will continue once the documents are filed in any court. The period of limitation is not applicable. NPA reporting and valuation of securities. Sir, here, once the loan turns into bad, immediately bank's procedural aspect is they will again valuation of the whatever the securities that are offered by the company, whether it is a primary security or collateral security. Normally the valuation is every 3 years. Every 3 years. Now once the loan turns into bad, once a loan turn into bad, immediately bank will ask the valuer, empaneled valuer, to value the primary and collateral security. This also useful for you. Why? Anyhow, after CIRP, you are appointing valuers, particularly land and building, plant and machinery, and securities valuation. If at all plant and machinery is there, buildings are there, then land and buildings, that is land building thereon, that reports can be compared with the bank reports. Once the loan is turned into bad, before filing the case, even though the case is filed with NCLT, bank procedural, this one is immediately they called the valuer, and what is the valuation? Whether my loan amount is fully recoverable or not, that is to be verified by the this one. So that's why NPA reporting valuation of securities. So the valuation of securities is available with the bank. You can take, because all are COC committee members only, financial creditors COC members only. If you ask, they will provide, because IBC prevail over other acts, and they normally, that is the purpose of CIRP is for them only. Then they don't deny to give the earlier valuation reports. The valuation reports given by the bank valuer compare with the your valuer, whether the valuer is correcting correct valuation or not, that is to be verified by you. Some of the valuers exorbitant. Now today what is happening in some cases, higher valuation or lower valuation, and a lot of the complaints are also coming. So in that case, once the bank is asking the particular the valuer, he will give the correct valuation. That valuation you can use and verify your valuer's report. Anyhow, you are going to appoint two valuers and for land and building, plant and machinery, business valuation. And third valuer, if at all the wide difference is there between first and second valuation, third valuation you will take, and whatever the nearest is there, you are average it. That is so that is irregularities, reclassification, irregularities in account and reclassification. Whatever irregularities are there in the account, definitely that will be available in the bank itself through they will report it to the higher authority. Periodic inspection, these reports are available with the bank. And if you go through the periodical verification report, it is only 1 page or 2 pages. For that, you need not. First, what I told is, sir, CIRP means 20 or 30 handled by the one IP is not correct. Max to max 2. If the loan exposure is more than 100, the financial creditor exposure is 100 crores, 1 or maximum 2. That's all. Otherwise, all these things have to be properly verified. Simply, only IBC, NCLT attended, all these things. Because you are designated as a chief executive of the company, company should be continued as a going concern. You have to satisfy all the stakeholders. And post-sanction and post-adverse remarks, excess and overdrawings, when it was given, for what purpose, what type of assets the corporate debt are purchased, whether it is alienated or whether it is continued or not, annual renewal of insurance policy, how many insurance policies the bank have, and whether it is bank is paying that insurance policy or they stopped and the CIRP, the IP has to pay the amount, that is also to be decided. Normally, as long as the loan is there, the bank has to renew the insurance policy. If at all the bank stopped, then you will come into the picture. So that's why you have to take some declaration or letter from the bank. Whatever the assets, whether the bank is paying or you are paying. If at all both are paying, it is a double insurance. No value. You will not get any benefit. Submission of stock statement. Whatever the latest stock statement, this is all our post-sanction. So whenever the company is facing the problem of the CIRP, stocks are not available in the stores. Immediately, it is to be stuck in your mind when the last stock statement submitted by the borrower. And after that, why the stocks are not stored in the, not available in the stores. So all these things, puff transactions means, sir, it is not simply on the forensic auditor or a transactional auditor like that. First, you have to make conclusion or confirmation that there is a puff transaction in the company. For that, whatever efforts are there, that you have to make it. So once you are having this daily, you are interacting with there is no problem. COC meeting is a different interaction. There is no bar. Whenever doubts are raised, you can contact the staff members, you can contact the financial creditor, because financial creditor is also having full information. But this type of information is not available with the operational creditor. Operational creditor, only one information is available. Whatever the stock or services provided to the company, for that correspondence is available, nothing is available. Next, quarterly information, the statement, audit balance sheet. You need not worry about some balance sheets also. Every renewal of working capital unless until audit report is submitted to the bank, bank will not renew. What is the last renewal? What information he has to provide? Ask the financial creditor. Recovery in accordance with the compromise proposal, compromise agreement. Sometimes some company, they are arguing with NCLT. Sir, we have submitted a compromise. That's why the CIRP not to be admitted. No court, even general courts also earlier, they don't take this type of information. Whether you have paid or not. Paid means get the confirmation from the bank. Not paid means we are discussing, we are submitting compromise. There is timely submission of a government guarantee or emergency loan. Sir, here also one alternative is available for. Suppose in pandemic COVID-19, almost all companies, they got 20% on the existing outstandings, or some companies 15, some companies 10%, that is called emergency loan. Emergency loan means that the loan is also the financial creditor may submit it to the IP. Whether that is eligible or not. Why? Because in the government also, government at that time, they created a fund, crores of rupees fund. For these companies, we are providing, those who, all companies in India, if they are standard asset at the time of COVID, straight away without any appraisal of this, straight away 25% loan to be provided. Loan to be provided. So, and in that case, if such cases are there, by the time the bank also may submit the claim, bank also may submit the claim. To that extent, the claim will be reduced. So the amount, because once the company is reasonable, if this one is there, particularly the sickness is there, reasonable sickness, and on account of pandemic further, the performance of the company is deteriorated. So government will not insist about this 20% or 15% or 10%, whatever the amount dispersed. So in that case, what you have to do is emergency loan. What is the current status? How much loan? How much loan, particularly emergency loan, taken by the company? Why you have claimed? Whether you have claimed that amount from the government or not? When you are going to receive that amount? For this emergency loan, whether you have extended any existing collateral security or not? Simply whatever the claim submitted by the financial creditor, you have to verify thoroughly and admit or not admit, and if not admit, what could be the reasons, you have to substantiate. Even CGT SME also, particularly MSME, that also you have to take into consideration. Some of the MSMEs, their coverage will, central government trust is there, particularly CGT MSME, that you have to claim, the bankers has to get the claim from them. Sir, in the particularly in the pre-sanction also, whenever they are processing the proposal, whether to process or not, they will verify in the project report the profitability of the bank, company, the break-even point of the company, the net present value of the company, the internal rate of the return of the company, the sensitivity analysis, the project implementation guidelines, all are available in the loan proposal. Not only that one, for that project, what is the various cost, how they are procuring that one by way of share capital or bonds or bank loans or etc., or government subsidy, etc., etc. What is a project life cycle? All these things. So here, for what purpose I'm telling all these things means, definitely this information is useful to understand better about the company. And once all these things are studied, then while handing over the company to any prospective resolution applicant, you can substantiate, because the resolution plans simply submitting, if they submitted 40 crores, you increase, sir. Increase is not the criteria. So how much, why you are asking increase? He is asking to decrease. Why we are not decreasing? For all these things, the interaction between the IP or COC or the prospective resolution applicant is very much required. So further, this type of analysis already available with the bank at the time of giving the loan. You please go through that this one also. After that, today almost all banks, they are obtaining legal entity identifier certificate. Earlier, this is only for RTGS NEFT. To know the diversion of funds, legal identity certificate is required. You verify the legal identity certificate number. With the help of that legal identity, how many transactions are completed by this company through RTGS NEFT? RTGS or NEFT. Earlier, this is only higher amount. Today, all companies are mandatory. Whether any fraudulent transaction or diversion of funds to the related party or not, with the help of LEI, that is possible. Legal entity identifier certificate. What is a legal identity certificate? We will discuss in detail. LEI certificate, RBI is mandated that LIE numbers and the expiry dates to be included in all initiating of receiving transaction 50 crores and above. Once the company is transacting 50 crores and above, earlier the company bank is asked, no, we will send the RTGS or NEFT 50 crores, but we want a LEI certificate. In India, after that, they removed that 50 crores, irrespective of the limit LIE, but all the information about that particular certificate is available at one particular point. How much funds are diverted to other before 1 year, the look back period 1 year, in case of non-related and related 2 years, definitely we will get the information with the help of LEI. In India, LEI can be obtained a legal entity identifier, that is CCIL India.lei.co.in, which is also recognized as an issuer for LEI by the Reserve Bank of India. Today, almost all corporates, they have to obtain the LEI certificate for sending the remittances. And this applies to non-individual customers who uses RTGS or NEFT services. RBI is also set timelines for borrowers to obtain LEIs with borrowers with a total exposure of 25 crores or more than required to be obtained by LEI by 30th April, that is over, completed. This is followed borrower with a total exposure of 10 crores, that limit is also removed. Irrespective of that one, today, all companies, they have to get the LEI certificate from the Clearing Corporation of India. And if at all funds are diverted to other entities or other individuals by way of RTGS, it is very difficult for you to verify. So once LEI number is there, through LEI, you can get the how much funds for the last not 2 years, even the look back period, if at all extended more than 2 years also, it is possible. For fraudulent transaction, the look back period is not mentioned. Even beyond 2 years also, you can go and get the information. What is a LEI code required in India? Legal entity identifier are important promoting transparency, efficiency, and security in the financial markets. Business loans LIE are required to business loans to strengthen the financial supervision, enhancing the risk management in the economic system. So, that particular business loans, LIs are required for business loan to strengthen the financial supervision and enhance the risk management in the economic system. Today, most of the companies, shell companies are there. Some companies, they are diverted the amount to other companies or other individuals. Then it is a bigger problem. To avoid that one, LEI is required. Risk management LEI improves the counterparty understanding and relationship assessment and fostering stability in finance. Regulator oversights the regulative body like RBI, SEBI mandated LEI to ensure the compliance with the international standard. Even all companies listed or SEBI, they have mandated the listed companies, it is a must LI. Even banks, irrespective of listed or unlisted, that is immaterial for banks, they have to, the companies has to get the LEI certificate. So that's why the LEI is also one of the important the certificate to understand better about the diversion of funds by the company, whether funds are diverted or not, to understand better. The next one is Dun and Bradstreet. This is also available in India. 2 to 3 companies are there. They are also having good reputation in the banking sector. So, whenever any doubt arises about the company, about the willful defaulters, or any criminal cases against the directors, or any enforcement directory actions, or any money laundering activities are happening in that particular company, it is very difficult for you to get the information. In that case, what you have to do is, for small amount of 10,000 or 10,000, the Dun and Bradstreet provides that information against the directors, against the company also. For that, the director's name, the director's PAN, the director's Aadhaar card, their email or cell number, whatever it is there, you have to provide. Company, whatever the registration number with ROC, or whatever a TAN or PAN number is there, that also you provide. Then within 3 days, they will provide that information. Particularly in personal guarantor to corporate data, this is very useful. Not only like even as I told earlier, CIBIL report, this is also one important. Bankers also, whenever we are processing credit proposals, we will obtain the Dun and Bradstreet report also about the company, because we don't know about the company. For that, what is a Dun and Bradstreet? Dun and Bradstreet, a leading global provider B2B data, business to business data, insights of artificial intelligence driven platforms. Today, to get the data, we have to use AI tools. that is artificial intelligence tools. Today, AI, API, application program interface, or machine learning, or cloud computing, with the help of this, it is very easy to get the full information about the company, full information about the directors, and help the organization around the world grow and thrive. You need not worry. You need not worry about this. Dun & Bradstreet Data Cloud, which comprises more than 500 million records, fuels solutions, delivery insights that empowers customers to grow revenue, increase margins, build a stronger relationship, and help stay compliance with even changing times also. Since 1841, companies ever sized has relied upon the Dun & Bradstreet, a risk management and a reveal opportunities. Now, whatever the miscellaneous items are there, banks are also verifying RBI defaulters list, banks defaulters list, SEBI or credit rating or loan statement or bank statement in case of takeover advances. Post disbursement due diligence. Banks are often given important to pre-disbursement due diligence. However, post-due diligence is also equally important in order to keep the healthy portfolio. Even though we are taking so many measures, still most of the loans are turned into bad also. Above is not exhaustive list, whatever I told. You should give an idea of the factors which are one needs to be considered. I have given some, it will differ to bank, and sometimes it may require more, etc., etc. Post disbursement, once the loan is disbursed, one has to keep a tab on the updates of the borrower, financial analysis by carrying out financial review, visiting customers or borrowers' business premises, obtaining CIR, credit information report from other lenders, multiple banks, monitoring the fund utilization, etc. This is happening in the banking industry. But here, the last item I'm going to discuss in the post-sanction is due diligence certificate. That is defined by the Reserve Bank of India. Due diligence certificate. What is a due diligence certificate? This is why the RBI letter number so-and-so. Lending under consortium arrangement, multiple banking. If the loan advance is more than 5 crores, the banks are to obtain the due diligence certificate. Due diligence certificate. What is a due diligence? If you see every bank, every 6 months, they are conducting due diligence on the company. You ask, have you completed due diligence certificate? If due diligence completed, give me one copy, financial credit. The due diligence complete, available details of the board of directors. All are available. In due diligence certificate that is obtained by the bank, this due diligence certificate is to be issued by either CS, company secretary, practicing company secretary, or cost and management accountant, or the chartered accountant. These three are eligible. For that, every bank is paying 20 to 25,000 like that. And a due diligence certificate, the practicing people, they will go to that company, they will verify the records, and they will submit the due diligence certificate on quarterly, the half-yearly basis to the bank as per RBI guidelines. If at all it is not happened, RBI will impose the penalty to the banks also. Whenever any big accounts are filed with NCLT by the financial institutions, and if they are the company, the committee of creditors, you get the due diligence to get a fair idea about the company. What is the due diligence certificate for the latest one? Due diligence report, statement showing the shareholding pattern of the company. The latest one. You need not take any trouble in understanding about the company. Due diligence, alteration of memorandum and articles of association of the company. If at all it is there, that will be mentioned in the due diligence certificate. The details of related party, you are talking about a related party in IBC also look back period is 2 years to arrive the PUF transaction. That is instantly available in due diligence certificate. You ask the bank, can I have the latest due diligence certificate along with the claim form? Or even if anyhow they are going to be the part of CIRP member, definitely 100%. 100% they will provide because IBC is a prevail over the other acts. And the details of related party transaction, details of loans to directors, to relatives, firms, companies in which directors are interested. That information is also available in the due diligence certificate. Loans to other business entities. Loans to other business entities, that is subsidiaries or associates, etc. That is also the due diligence certificate provided by the professional. That is instant information. Details are from the borrowed by the company firm, its directors, members, bank, financial, others. Default in repayment of public deposits, unsecured loans, debentures guaranteed by the banks or financial institution. Whatever the defaults in repayment by the banks, by the company to the public deposits, the companies are eligible for public deposit, unsecured loans or debentures. That is also reflected in the due diligence. And the creation, modification, and the satisfaction of charges of the assets of the company under Section 77 of the Companies Act 2013. That is also available. That is also available. Principal value of the forex exposure and overseas borrowings of the company. You need not worry. That information is also available. And issue and allotment of securities and the redemption of preference shares, debentures, shares bought back. That information is also whether insurance of all secured assets are available. Due diligence. In the due diligence certificate issued by the professions every 6 months to the to the companies who are borrowing from the banks. And 5 crores and above only, if the total loan exposure is 5 crores and above, definitely that is a Reserve Bank of India guidelines and the compliance with the terms and conditions set forth by the lending or bank's financial action. Whatever the terms and conditions fixed by the bank, whether they are adhered or not adhered, that is to be commented by the professional who is going to issue the due diligence certificate. Declaration, payment of dividends. How many up to what date the declaration payments of dividends has happened? That is also commented by the professional whenever they are giving the due diligence. Insurance for all assets, and whether the name of the company or its directors defaulters in RBI list. That is also available in the due diligence certificate. That is to be obtained by the banks on half-yearly basis. For the for those companies which are lended by the bank, and whether the name of the company or its director appear in the specific approval list of Export Credit Guarantee Corporation. So sometimes the directors are doing wrong things while sending the goods through other countries. Whether these names of the directors are reflected in ECGC listed like RBI defaulters list, there or not, that is also available. Payment of all statutory dues, satisfactory arrangements for areas of such dues, particularly EPFO, Employees Provident Fund, TDS monthly, he is remitting or not, ESI, Employees State Insurance, or whatever the labor code that is there, whether they are fulfilled or not, that is also to be commented by the particular professional in due diligence certificate. Application of funds of the borrowed from banks, financial institutions for the purpose of which they borrowed. Application of funds once they have taken working capital, whether it is properly utilized or not, whether it is diverted or not, that information is also available in the due diligence report and compliance with the provision of 372A of the companies in respect of intercorporate loans and investment. You need not worry. This the due diligence certificate is sufficient. If it is the bank is obtained every half year, if that company is turning to non-performing, this due diligence gives good information to the bankers, to the IPs, and compliance with the applicable accounting standard issued by the ICA, and whether the accounting rules are properly followed by the company or not. That is also available in the due diligence certificate. And credit unpaid dividends and the amounts required to be credited to the investors education fund, that is also to be commented by the professional, either CS or CMA or CA, that is available in the due diligence certificate. And details of prosecutions initiated against the show cause notice received by the company for alleged defaults, offense, and various statutory provisions and fines, penalties imposed. That is also available. So here, what I told is, once you get the due diligence certificate of the company from the financial creditor, who is the part of the committee of creditor, whenever he is submitting the claims, along with the claims, you ask the due diligence certificate. Then a lot of your burden, lot of your problem will minimize by this one. And compliance with the provisions of listing agreement, whether the company is following the listing agreement or not, that is also mentioned. And deposit of employees contribution, provident fund with the prescribed authorities, that is also one due diligence audit is there. That is every 6 months. This is also instantly available. That this is with regard to due diligence certificate, sir. Are you getting my point or not, sir? Sir, are you understand this point or not? Any clarifications that are required? Sir, now coming to the term digital footprints. Today, you have to use artificial intelligence, machine learning, cloud computing, application program interface, whatever your information that is, whatever the information that is required by you during CIRP or PPIRP process through digital footprints on. So the term digital footprints refers to any data collection about the specific individual, such as social media, media profiles, web cookies, or a behavioral pattern of the web. Then this information is useful for you, whatever the information gaps are there in your CIRP process or PPIRP process. Digital footprints data includes factors such as purchase history, browser activity, and the IP address can be useful in fraud prevention. Types of digital footprints are two types. One is active digital footprints. post videos, text or social media, send broadcast and communications, write blogs, etc. Passive digital footprints stored in one's browser as cookies, visitors, etc. This is in brief about the post, that is the credit management process, three stages, that is pre-sanction, sanction, and post-sanction. Why this chapter was initiated means, while doing the CIRP process, you have to get some information for identifying the fraudulent transaction, or to arrive the correct claims, or to arrive the particular related party transactions. All these things are there. If at all we have not gathered that information properly, then the process will be delayed. The quality of the process will not happen. So the bankers are having wide data. That data is useful to improve the quality of the CIR. That's why the insolvency professionals, they should have the knowledge about the credit management mechanism or credit management guidelines of the bank. Then only the quality will increase. Whatever the knowledge gaps are there, that will be covered during that particular this one. So this is in brief about the second days, the credit management process of three steps: the pre-sanction, sanction, and post-sanction. And any doubts or clarifications are required, then I am ready to provide. Otherwise, we will wind up the today's class. Sir,
Yes, sir.
any, if at all there is no doubts, all are covered. Tell me. If there is no doubts, shall I close it now?
If you like, sir.
Okay. Good night to all. And thank you very much for giving the opportunity to discuss about the credit management steps while lending to the corporates or LLPs, limited liability partnerships, pre-sanction, sanction, and post-sanction. In this process, the one important document is a due diligence certificate. The due diligence certificate normally issued by normally the banks are getting from the profession like a company secretary or cost and management or chartered accountant like that. That is useful to get us good information about the company. And thank you very much, and good night to all.
Thank you, sir.